Hello, crypto family. Welcome back to Crypto Deep Dive. This is your host, Mehdi, Senior Investment Analyst at Token Metrics. Guys, if you have been following me on Twitter, I have been all praises about AVAX. I even ran a poll where I gave you options, 4 options to be honest, and you selected AVAX as the topic of the next deep dive. So here we are, and I'm gonna do a deep dive on it. So the whole purpose of this deep dive is just not to give you a financial or investment decision, but to also kind of make you aware regarding the technology, also kind of teach you how to evaluate layer ones. There is a very big misconception that you just need to own the next big thing or the next shiny object in order to make money in blockchain or in crypto. But I kind of feel like with layer ones, there will be few layer ones that will emerge as the next FANG. So when I say FANG, I mean Facebook, Apple, Microsoft, Amazon, so on and so forth. And these investment over the period of time compound, and the rate of compound it does happens is at a very exponential pace, especially if you are kind of invest in this project early. I wouldn't say you're too early, but you're not late either, in my opinion. So without further ado, let's just jump right into it. So what does Apple do? Let's just start from first principle. Apple is in the business of selling iPhones and MacBooks. And what about layer ones? Layer ones are blockchain, and basically they are in the business of selling blocks. Now, within the blockchain, the problem is the most important decision, the most important business decision is which block should come next in the chain. And that decision is difficult because you have multiple different nodes or agents in a distributed system. You want to make them agree to a same decision. So when you make them come to a same decision, you have trade-offs. So Vitalik pointed out that you have a trade-off between decentralization, scalability, and security. So for example, in case of Ethereum, you have a trade-off between scalability. Ethereum is slow, and because of that, we have high gas fees, but it's very secure and decentralized. So every blockchain, through its own methodology, is trying to tackle this. With IOTA, for example, you see a DAG-based consensus mechanism. And in case of Avalanche, you have a unique mechanism called Snowman. So let's just dive deeper into this consensus mechanism so you have an appreciation of how the technology works. I think once you get this done, you'll understand why Avalanche is unique and why it has high throughput and low latency. The way their consensus algorithm works is by random sampling. So just bear with me for a couple of minutes. Let me just describe you and set the context. And afterwards, I'll literally show you through visualization on how this consensus works. So you have a consensus that works. It's a form of DAG, and it has similarity to gossip algorithms, but it works by random subsampling. Bear with me if it sounds complex, but I'm going to explain it to you and give you a nice intuition. Let's say at this current moment, we have 1,000 YouTube attendees who is at the moment deciding whether to order pizza or hot dogs. Now, let's say every one of you guys have initial preference, but all of you have to agree on one decision, one final decision. And let's say that final decision could be, we want pizza. So let's say as a YouTube participant of this channel, you ask, let's say 20 other YouTubers or YouTube attendees at the moment, what will they like to eat? Now, 12 out of 20 say pizza. And it kind of seems that majority of the network wants pizza. So now when somebody asks you, you'll be say, you know what, 12 out of 20 people say pizza, I'm going to say pizza as well. But what you're going to do is you want everybody to agree, right? So next, what you'll do is you'll perform another round of sampling, and these will be random participants as well. You'll ask another 20 random sets of participants, what do you want? If majority say it's hot dog, you'll actually flip your own preference. But we know the right decision is pizza, right? This was the outcome we wanted to achieve. But let's say now majority says pizza, and then you say out of 3 times, 2 times you got pizza. So you do a complete iteration, and let's say out of 100 times in a row, you basically get pizza, 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 and you kind of have an avalanche effect. Avalanche effect is when snowflakes like ourselves within a network becomes an avalanche, and your decision because everybody's agreeing on pizza, it becomes finalized. Now, the beauty of this consensus mechanism is because participants in a node communicate with a small fixed number of peers in each subsampling round, the message complexity is very low. So in a blockchain, you can have thousands of participants, but in this case, in our consensus mechanism, we only have at each round 20 people basically saying that, like, whether they want pizza or whether they want hot dog. So the messaging complexity is low. If you compare it to classical consensus mechanism, where the messaging complexity increases as the number of participants within the network, or when the number of validators increase in the number in number. And because of this reason, Avalanche consensus is extremely fast, and you can approximately execute 4,500 transactions per second, and with instant finality, transaction finalizing less than 2 seconds. And because of this unique consensus mechanism, you can also run Avalanche network on cheap hardware, and it doesn't get impacted that if more people join the network. So let's just give you a demonstration. Sorry, guys, I know it's a bit complex, but just bear with me. I'm going to give you literal visualization of this. So let's just look at this. So over here, I said subsampling sample of 20. And these will be the random people we are going to ask whether you want pizza or whether you want hot dog. So you just have two decisions, and we'll run this. So in this case, the whole network basically asks each other and comes to a final decision. So the final decision was pizza. So there was a choice between two colors. Yellow represented pizza and blue represented hot dog. So let's say if we run 100 iterations and we want 100, within those 100 iterations, we want pizza, 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 pizza all the time. And because of this, whole network comes into consensus. So a snowball becomes avalanche. So let's run this simulation again. This time around, maybe it could be that we get hot dog. So see, instead of blue, basically network is agreeing on the yellowish golden color, which is hot dog in our case. So the whole network agreed that hot dog should be the preference. So this is how a snowball consensus mechanism kind of works. So hopefully you guys had an appreciation of how the consensus mechanism works. Now let's just look into the unique architecture of Avalanche. So this was the first innovation Avalanche has. And now the second uniqueness about Avalanche is that it's kind of like it has three chains, and three chains has different functions. So the way I kind of see the C chain is kind of like a faster Ethereum. I see the P chain, the platform chain, as like a slightly faster Polkadot, or maybe perhaps you can think of it as a layer zero Cosmos, for instance, with subtle differences, which I'll highlight. And then you also have X chain. You can kind of think of it as IOTA and Nano. So all of these things have different purposes. Let's just jump into the first chain, which has been very popular recently. So C chain is an EVM modified smart contract blockchain. This is where all the magic happens. So it's Ethereum compatible, and it's byte per byte backwards compatible with existing EVM dApps out there. So anything that's built on Ethereum, it can be deployed here. It also supports key Ethereum tooling with subtle differences, but it supports Solidity smart contracts. So any developer who made a dApp in Ethereum with small changes can basically deploy it in Avalanche. It also supports Remix, MetaMask, and it uses a unique Snowman consensus, which makes this chain faster than the current iteration of Ethereum 1.0. Now, this is the P chain. This is what you're buying at current prices, guys. And this is the part which I'm very personally excited, because I believe in a multi-chain future. I don't want layer ones to have a monopoly or duopoly or oligopoly. I want just healthy competition, multiple chains existing, and you can think of blockchains as nation state with their own flourishing economy, and they somehow communicate between each other. So this is what I like to have, and this is also the vision of Avalanche through their platform P chain. So let's just kind of delve deeper into this part of their architecture. So you can think of P-chain as a platform, like a platform of platform. It's a blockchain that tracks and keep tracks of active subnets. So subnets could be other blockchains. So think of it like this: with Avalanche, you can deploy other virtual machines. So you can have UTXO of Cardano. You can have Bitcoin script running as a own blockchain, and you can also decide how this blockchain will be run, and you can basically borrow some of the validator sets if they would like to basically run these subnets, these custom chains, for example. And in order to run them, they still need to stake their AVAX token. So you can basically run multiple blockchains via P-chain. And I'm going to come to the conclusion that in the future you'll have different virtual machine. At the moment, EVM is the best virtual machine with the most network effects, but it could be the fact in the future Wasm is one of them, or people also like the Cardano's, the way Cardano deploys smart contracts. So we have some iteration of that running over here. But most importantly, you'll also have permissioned blockchains, and this is what I think Avalanche vision is in the future, and I think that could lead to a massive enterprise adoption. So what you can do with these blockchain is you can have customizable and interoperable Avalanche platform where blockchains within like different subnets can communicate between each other, and you can have many self-sovereign chains and subnets and virtual machines that can cross communicate and kind of also obey certain kind of hard coded rules or social or legal rules that the the subnet has. So, for example, you can have a subnet that's optimized for very high throughput. So you can have custom hardware requirement where you need high class GPU, CPUs, and RAMs and stuff like that. So the transaction speed is very fast, a bit like Solana. Then you can also have certain features where you can have on-chain governance or certain types of staking rewards and so on and so forth. And maybe you need like a subnet for security tokens. So when you have subnets for security tokens where you want to tokenize real estate, you might need KYC validators. So this is very important. So let's say if you want to sell a real estate as a token in US, you don't want validators to be from, let's say, North Korea. That will have legal implication. So you might want KYC validator set and of particular geography. And you can also have, let's say, you can also make like a privacy based virtual machine, and basically you can also have a scenario where you want a private blockchain where contents are only visible to the participant that have selected or whitelisted. For security tokens, you might also need whitelisted addresses, and you might need like an anti-airdrop mechanism. So for example, if you are a citizen of US, you don't want anybody from North Korea to kind of airdrop you assets without your permission, which is at the moment a problem with Ethereum, right? Anybody can airdrop anything. So that's the vision of the P chain. Now, X chain is slightly different. It's basically, you can think of it as it has a Avalanche virtual machine. It's basically very similar to a DAG. So you can think in terms of IOTA and Nano. And I think it will be used for peer-to-peer transfers. And at the moment, you can create Avalanche native assets. You can do cross-chain subnet transfers. And it's built on Avalanche consensus and has similar architecture as a DAG. And basically, what they're trying to envision with this is very, very high throughput. So think of application like payments. So guys, this is a vision. They want to create this blockchains of blockchains kind of ecosystem, and they also have their own unique bridging where let's say if people from Ethereum or Bitcoin or Cosmos, they do not want to deploy the virtual machine and they still want to enjoy the network effect of their respective chain, they can bridge it towards Avalanche. So in the long run, you can kind of see Avalanche having multiple chains, having multiple communication layers, and it will be interesting. You can also have atomic swaps from different chains, and there will be cross-chain transfers. And I think it will be amazing, the whole customizable natures of blockchains and interoperability, and how the interoperability is also kind of composable. So yeah, I think it will be a very, very interesting vision. It's a very interesting vision, and if I think they are able to successfully deploy that in the future, I think it will just blast off. Now, before we jump into tokenomics, This was a technology, so it's very important to understand technology in order to make your thesis. But I think the most important thing as an investor, especially in blockchain, I think it's still very early stage investments. So you have to bet on right team. So, so in my case, the way I kind of judge the team is by looking at how the founders are and how some of the team, like what some of the team members are. So Emin needs no introduction. He has a prolific academic career. He has been basically researching distributed systems, and like when it comes to the architecture, the consensus mechanism, if I want to take a bet on who solves this issue, I mean, this is the guy you want to take a bet on because of his academic pedigree and the way he kind of thinks about things. If you kind of also look at so this also ties into the thesis that whenever you're investing, you need to have a product market fit, especially in this kind of environment, guys. So when I say product like founder market fit, what do I mean? You need a founder which has an inspirational story or previous background that has inspired him, that has given him the fire in his belly to kind of go and solve an issue, solve a problem, or even have a solution before the problem arrives. So this is the kind of founder I like, and this is the kind of founder you want to bet on. The founder could be technical. If the founder is not technical, his right hand man has to be technical. But in this case, the founder is technical, and his right hand man, I would say, complements him very well. So the vision of Avalanche is to tokenize financial assets and other security tokens. And I think one of the best members you can take a bet on is John Wu. Good pedigree, went to Harvard University. Tiger Management is an amazing hedge fund, so he understands traditional finance, and now he's basically the president of Eva Labs. So I feel he'll be betting on the right founders to basically take the Avalanche ecosystem forward. Another proxy I use to kind of judge founders, if I'm having difficulty in terms of analyzing them, I basically go and see what the investors are doing. Investors such as A16Z, Dragonfly Capital, Digital Galaxy Digital, Lemonscap, Hashkey, Polychain Capital. These are big names that have done good bets when it comes to in terms of cryptocurrency. But when they're making decisions, they're making decision under uncertainty. They don't know what will happen. They're just taking a bet on the founder. So if they are taking a bet, that means the founder or the team was very good. And that is the reason mostly, like I would say 60-70% of the factor in terms of them taking a bet. So this is how you kind of judge the team. Look at the investors and also look at the background of the team and the founder. In this case, it's 10 out of 10. Now, I described you the architecture. Now, let's just talk about the tokenomics. How does the architecture kind of facilitates the token utility, token supply? So first, you'll need AVAX tokens to kind of secure the network, and you'll need more AVAX token if you want to create your own custom chains. So for staking purposes, regardless, or if you want to run your own subnets or you want to secure the network, you'll need AVAX. So that the staking to kind of secure the network reduces the velocity, the circulating supply of AVAX token in the market, and hence the price in the future should go up. That's how staking works, and reduces the velocity of the token within the network. The other part is the fee bonds. I'm just going to read it out. So each type of transaction, whether it's blockchain subnet creation or asset creation, if they go into the security token realm, or the importing or exporting any particular asset, has a fixed fee unit in terms of AVAX, and all the transactions on Avalanche will burn some Avalanche. So having said that, this pressure will only show up over the long run. That can be considered negligible as of today. And I'm going to show you a diagram. But in the future, there will be a fee burn, and Avalanche in a few years' time will become very deflationary. And the other reason is why you want to own Avalanche is that you can kind of think of these utility more along the lines of kind of like equity, but they also have the currency element of P2P payments, where the exchange can be very suitable for peer-to-peer payments. And at the moment, we don't have a particular MasterCard or a Visa of blockchain. And I think apart from Solana, another candidate could be Avalanche for the P2P payments side of things. So there could be interesting application from one, like let's say in the future, one central exchange wants to do a settlement with other central exchange. They can use this P2P payment side of the architecture. And very, very optimistically, you might even see some kind of economies who want to deploy CBDCs can do it through, theoretically can do it through Avalanche. I wouldn't be surprised. Let's say small developing economy who do not have the resources or technical firepower, and they want to launch CBDC, they might just leverage Avalanche, for example. So in terms of the demand side of tokenomics, there is also supply side of the tokenomics that you guys have to take into account. Avalanche, unlike Ethereum, has a fixed supply. So whatever happens, you'll have 720 million Avalanche minted over the period of time. And over the period of time, because of the creation of subnets, custom nets, assets, transaction fees, you will have AVAX burn. So over the period of time, because of the cap supply, Avalanche becomes deflationary. So this is a chart that the team has provided us. So at the moment, you'll have new supply coming up in the market because of unlocks of investors and staking rewards. But once we kind of establish some maturity, you can see the supply of Avalanche decreasing, and eventually the burn supersedes the new supply coming to the market, and it becomes deflationary. So now let's just talk about some of the on-chain metrics I use. I think there are three things you need to look into when you're evaluating any layer one. The first thing is how many, like what's the on-chain metrics? How many new addresses are being created? How many daily transactions are we seeing? What's the TVL looking like? And the other factors are, in my opinion, developer activity. Developer activity is a bit tricky, but even on that front, we can have some proxy to kind of show you that it's doing good. So daily transaction is growing exponentially, as you can see, guys, over here. Avalanche unique addresses, despite volatility in the prices, has been going higher over the period of time. Even when the price dropped, you kind of see unique addresses created going higher. At the moment, it's still not using 100% of its network capacity. It's using 30-40%. So let's say if the use case of Avalanche goes higher, 2x, 3x, I think it can still handle it. So that's a good proxy that we have robustness and some steep left in terms of what AVAX can do. This can kind of proxy the developer activity. The C chain, which is kind of the EVM platform, the number of contracts deployed is increasing as we speak. So that's good. Like within 1 year, you have seen exponential rise. The developer activity, despite the price going down, the developer activity is bouncing, and I think it will bounce further, especially with subnets and custom nets coming up in the future. The Avalanche ecosystem is very big. I'll come to this point later. You need a magnifying glass to kind of see this. And guys, also Alpha Leak. I'm gonna go deeper into this. Some of the names over here are some of the projects have been launched, so you can basically study them now, and then basically when it launches, you can take a decision whether it will be, let's say, 5x, 10x kind of opportunity, and then make a decision with regards to your portfolio. Now let's talk about valuation. AVAX has the third largest TVL. I would say it will be third largest, but Binance, as you know, has the support of the exchange. Avalanche doesn't have that. And also Ethereum, we know, has huge network effect. So let's exclude that for the time being. But I can see the TVL of Avalanche going higher, especially as liquid staking and all of these primitives come to the market. In terms of FDV to TVL, Avalanche is on the cheaper side. I think is the second cheapest option over here. The most expensive is Cardano, Polkadot. Cardano could be good, but we don't have execution. Whilst the founder of Cardano and Polkadot, I would say MN of AVAX is as good as these two guys. So you're basically buying value, in my opinion, over here. Now, in terms of TVL, it's the third cheapest in terms of fully diluted valuation. Is the third cheapest option over here. It's cheaper than Cardano. So if you're kind of seeing execution, I don't see why it cannot overtake Cardano. Now let's just talk about entry points. If you're into TA, I believe just buy on the trend line if you can. Like, I don't have a crystal ball of what's going to happen in the market, but if you kind of see the market from a macro perspective and you just zoom out, if you zoom out, you can see that there has been a nice recent trend line support established over here. So let's say buying the dip around $75 to $80 mark is a good entry price, and then you can take it from here. Now, the other chart I have for you is basically if you follow the trend line and there is some kind of a variance and standard deviation on on the trend line. Despite that, you arrive at a realistic price prediction of between, I would say, $220 to $270 mark. So the average will be around 240. So that's the price prediction I have for the end of 2022. If the market remains well, and we remain in this kind of standard deviation. If the regimen of the market, the structure of the market changes, and we don't have this kind of a trend line, we have this kind of trend line, who knows what will happen. But if the market remains like what it is right now, if it's kind of range bound till the year end, slowly but surely Avalanche can go to a realistic price prediction of 220 in my opinion, and that's a 2x 3x from here. So this is not all, guys. I also found their 2021 overview report. So I'm going to delve deeper into it. So this was the trend line I drew, the one I was mentioning. So you can see that price can be volatile, but over the period of time, if it's going higher, you can realistically go to $213, as you can also see from this kind of a trend line. Yeah. So let's just go over the Avalanche 2021 report. So basically over here, they are kind of showing you their vision that we don't see all of these ecosystem as competition, but we want to be friendly with them. Multiple chains are good. Let's bridge them and just enjoy each other's success. So basically, they're kind of showing you market comparison of blockchains over here. I kind of show it to you here as well. They're basically saying that Avalanche is cheap. And basically say that we have 300 dApps, 60 exchanges, 13 billion DeFi TVL, and less than $1 transaction fees. And we are one of the cheapest layer ones out there. They're also kind of showing you the transaction counts I've shown you. So active daily addresses are going up, cumulative addresses are going up, transaction counts are going up. And basically showing that they're well diversified. 61% of AVAX is staked. More AVAX can be staked, especially when subnets goes through. And the top nations in terms of staking are US, Germany, South Africa, India, Australia, UK. They basically showed you what you could have done if you invested $1,000 of AVAX. Let's not just do this. I don't believe in all of that. But yeah, this is the good part. We had Avalanche Rush. They just deployed 180 million. And if you compare some of the other ecosystem like Near deployed $800 million and now deploying 150 for DeFi. So they're spending a lot of money, but despite all of that, Near hasn't performed that well, which I think in the future they could. But AVAX with small amount of deployment was able to do really well. They had Curve, SushiSwap from Ethereum, but they also had very nice native projects like Trader Joe, Pangolin, and Benqui, which is the money market of Avalanche. So very, very good projects building up, especially when it comes to DeFi. Basically, they are also saying this, that price do not matter. Sometimes you have good news, price do not follow that, but eventually market catches up to the price. They also basically said that they have launched 220 million Blizzard incentive programs, and that basically did well for AVAX price. So you had $220 million incentive for DeFi and NFTs. You have amazing investors helping them. Polychain is good. Three Arrows Capital is amazing. Dragonfly, and so on and so forth. Basically, they are showing you the ecosystem. First, they show you the TVL. The TVL has grown up, but I wouldn't just go by TVL. I think DeFi TVL can be mercenary. If there are more APYs in Phantom, it can migrate there. So TVL just off DeFi, not sure. What I'm more bullish on is the NFT gaming metaverse side of things. Let's see how that plays out. And I'll send the link below of this presentation. I think some of the projects over here haven't launched. So you can basically identify those. So again, they're basically showing that they have different bridges that will help them be multi-chain. And their bridges are unique and fast. I've used their bridge from Ethereum. It took me 9 minutes, and I had a very pleasant experience. And when you kind of enter AVAX, the UI and UX is also very good, kind of welcomes you to a new ecosystem. Over here, you have a DEX comparison. Big fan of Trader Joe, by the way. They are also kind of showing you the comparison on how much money was raised and when it was raised. So amazing project raised money. Like Kalau is one of the projects I really liked. Roku Finance has Rise Online. Imperium Empires is also very good gaming project. So you can kind of see different projects building up. You have DAO Colony is also very good. So different projects launching natively, which is amazing. And a lot of NFT projects are also launching. basically also kind of showing you the composability of AVAX. Like you can swap asset, lend, farm, and things like that, which is one of the reasons why I love blockchain, because of the composability in the long run. And now they gave their 2022 prediction. Uh, they're basically saying that the derivatives, option, and asset management and layer 2 applications for DeFi will grow. Again, options and derivative is the only theme I'm interested in, one of the verticals I'm interested in for the long run. So let's see how that goes. Ribbon Finance launched on Avalanche, and Ribbon Finance did really well. So let's see how that goes on. But guys, this is Alpha Leak over here. Some of the projects, some of the metaverse gaming NFT projects are mentioned here and they haven't launched. So, for example, Crypto Monkey Empire is one of the projects that's launched, that is raising at the moment. So, if you are able to kind of study these projects and do your due diligence, you might be able to find alpha opportunity and make 5-6x. So, do study some of these native projects. There's another metaverse project called Satoshi City that is also being made on Avalanche. So let's see how that goes. But you have different projects building up, and some of these projects are not public. So just study them and identify some of them that could be good. So yeah, thank you guys, thank you for your patience. And yeah, I think we were able to cover a lot of ground, and I'm very appreciative of the fact that you were able to withstand me for such a long period of time. So thank you, and I hope to see you next time.